Hello there, welcome to another video on investing on the stock market. Doing a fundamental video today about stock price. How important is it and what does it actually mean? Now, it's no secret that I don't pay attention to the stock price a lot personally, but I think that just as many bad investing decisions has been made based on the stock price as good ones. So I'll just quickly go through what a stock price means and what it means to you as an investor. Now, so the stock price times the shares of a company determines the value of it. And the value of a company is set at its IPO, the initial public offering on a stock exchange. And so financial analysts come together and they determine what the company is worth based on its assets and operations. But from there, the stock price moves just like everything else based on supply and demand. Simple as that. More people want to buy, the price goes up. More people want to sell, the price goes down. So the price is controlled by what investors are willing to pay, and that is controlled by sentiment. Are investors positive or negative about the stock? And that ultimately decides what the stock is worth. So just like everything else, if you're buying a car, a house or a watch, the price itself is not the most important thing, is what you're getting for that price. So you need to determine whether it's worth the price and not just what's the price. And so in that vein, a high stock price, so Amazon's stock costs $1,400, that doesn't mean it's an expensive stock. And some other company might have a stock worth $10, that doesn't mean it's cheap. It has nothing to do with the matter. It's all about the company versus the price. So your job as an investor is to look at the current state of the company and what you believe the company will do in the future. So that's based on growth and management and innovation and so on, and macroeconomics. And based on that, you have to decide whether you think it's worth the price or not. Now, a lot of people will check out investment ratios such as PE, PB ratio, price to cash flow ratio, or they will check out what analysts say at Morningstar or the average rating at NASDAQ or Bloomberg or whatever. But to me, investing is the whole package, the whole company, and the vision for the company forwards. And that's not as easily available. And I don't think you can just look at the PE ratio or look at the analyst recommendation and say that's what it's worth. To me, the stock of a company is worth what the company can be and will be in the future, not what it is today. And a lot of the analysts' recommendations and ratios are about the current state and operation of a company. And while that is important, because you want a company with healthy balance sheets, strong innovation, good product line, you also want to see into the future, because that's where the upside is. The potential upside is if the company surprises to the upside, then the stock will skyrocket, right? But the company can still do well in the future, but the stock can go down because they didn't do as well as expected. So keep in mind everything, stock price, expectations and everything is, and performance is relative. Everything is relative. Do keep that in mind. So there are two sayings about investing that I want to sort of change up a little bit. In investing, you have to buy low and sell high, but don't mistake that for waiting for a stock to be cheap. If you like a company, you should never wait for the stock to go down a lot till you think it's fairly valued or you think it's cheap to invest. If you love the company, just invest. So don't get caught up in this, Facebook stock is at 400, I want to wait till 300, or Amazon is at 1,400, I'm buying at 1,000. I really like the company, but I think the stock is too expensive. Now, if you think the stock is overvalued, fair enough. But if you're considering buying because you love a company and you're like, nah, I'll wait till it goes down 20%, that's probably not going to happen. Because if you love the company and the stock is flying high, there's a reason for that. There's a reason why you like it. There's a reason why other investors like it. It's because it's a good company, people are optimistic, and the stock will just keep going up. So it's a bit contradictory to say you like a company but you're waiting for the stock to go down. If you like a company so much, why would the stock go down? Apart from a stock market crash or something. Now, the other thing is something Warren Buffett lives by: buy great businesses at great prices. He's a great investor, probably better than I will ever be, but I would say buy great businesses, period. I think people get caught up in the price, they get confused, and they lose track of what the stock price is and what it represents, because a lot of investors actually have different views on what the stock price is and how to read it. So I just take it out of the equation and just look at the company, because I don't think basing your investing on the stock price will lead you anywhere good. So not just buy great businesses at low prices because you will get caught up waiting for that golden opportunity. Just buy great businesses and you'll do fine. And that has been the case forever. So there's a lot more I could say about the stock prices, and I get a lot of questions about, what do you think about this stock at this level, this company at this level? I comment on the company and that's about it. So good luck investing. As always, I'll see you guys in my next video. Drop a comment if you like the video. Subscribe. See you.